Hi everyone, Tony this side. I just thought to make a quick video on how to trade cup and handle trading patterns. Okay, so possibly you all are aware about cup and handle patterns, right? I just shared a chart on LRC where I made a pattern, and I thought that I can explain you guys why this cup and handle pattern is actually very useful in trading, right? But only if you understand what are the conditions behind this. Okay, so I'll be explaining some of the few points which I always consider while trading cup and handle pattern, right? And they are debatable. There might be other people trading cup and handle in different ways, but I want to share with you how do I trade a cup and handle pattern. Okay, so I'll be going on this chart, okay, and I'll be explaining you why I say that if price breaks this level, it is going to 60%. Like I'm going to target 60%. I have not given any resistance in between. I have not given any other target in between. I'm just expecting price to pop 50% from 450. All right. So let's go. So I have written a few things on a notepad. I'll share it with you guys as well, or you can see in the description link all these details. Okay, so with the definition, when price consolidates in a round shape like a cup with a small handle, which can be a rounded shape, which can be a different kind of consolidation pattern like falling wedge, bullish pennant, or bull flag. Okay, that is what we call cup and handle pattern. I've just googled some images for you. Like here we have a round shape. Okay, the round shape with a handle of you can say a bull flag, right? That is a cup and handle pattern. The another example is with a bullish pennant kind of a structure with a cup. That is also a cup and handle, right? Here we have another with a bull flag. Okay, and in the same manner on Google you can see many patterns with the cup and handle shape. Okay, so first I want to inform you that cup and handle is usually traded as a reversal pattern, like it usually forms at the top of the structure of the trend, or usually in the at the bottom of the trend. But in 30-40 cases, sometimes we also use this pattern as a continuation pattern. Here you can see the price was already in uptrend, then we see a cup formation and then a handle breakout. So it is a continuation pattern here. In 30-40% cases it works as continuation pattern, but mostly you will see cup and handle as a reversal pattern. Okay, so I have LRC chart here, right? So I've used this black vertical line to show you that we would be talking about the right side of this line. Okay, we would be discussing about the right side of this line in this chart. So what are the requirements, what are the conditions for cup and handle patterns? So as I told you, it's my way to trade, okay, and they are debatable. So if any one of you think that I do not need to follow these rules, it's up to you. Okay, so very first condition which I give the highest priority, that the cup shape consolidation should be of minimum 50 candles. Whatever the time frame you are using, a 5-minute chart, you are using 4-hour chart, you are using 1-day chart or weekly chart, but the cup shape, the round shape of the pattern should have at least 50 candles. In the chart of LRC we have approximately 140 bars, like it's the price action of 140 days, because it's daily chart, right? So it's 140 days that price has been consolidating in a shape, in a rounded shape. Okay, and it should not be a perfect rounded shape. It can or may not be, right? So it can be a exact round shape, or it can be a shape like this, but it should be almost like a cup. Okay, so this is a rounded shape which I have considered as a cup because these candles are more than 50. Okay, it can be 80, it can be 100, it can be 140. Okay, it can be 200, but it should be at least 50 candles. Second thing, that handle should be 8 to 10x smaller than the curve in general. Okay, so that says if this consolidation is of 50 candles, so the handle should have only 4 to 5 candles. That is also important. Sometimes these kind of structure we see many times, like if somebody have considered this part. Okay, I'll just highlight this part. So if we see this part, let me just change its color. So look at the pink part. So if somebody comes to me or see the chart, he can say that this is a cup formation. Okay, and when price was moving around this area, he might be considering that price is going to make a handle over there. It will pump and will go high like this. Okay, but price didn't went through. Okay, why? Because when the handle was under the formation, because if we see on small time frame, it will for sure be more than 50 candles. On 4 hour, it would be more than 50 candles in this duration. So the cup was in its condition, but the handle, if you see the bottom of the handle, if I consider at this level, this has already 1, 2, 3, 4, 5, 6, 7 candles, right? So there were less chances that this handle is going to be formed and going to break out. So that's why I always assume that handle should be smaller. Okay, in chart of LRC, what do we see? What do we have here is handle contains only 1, 2, 3, 4, 5, 6 candles. So we only have 6 to 7 candles or 5 to 6 candles. That says that the handle formation is more than 10x, or you can say that it's less than 10x of the cup, even more, like 15x times. So the handle is very small while it was breaking out. That's why I consider this is a better shape of cup and handle pattern. Okay. Third I have is handle in general should not retrace more than 50%. Okay, sometimes I see people posting cup and handle pattern where they show the handle correction up to 60%, even 80%. But for me, or in general, whatever I have read from my experience or know from my experience, this correction here, let me remove this shape. Okay, and now we would be talking about this area. Okay, this is the handle. So this move from the neckline. Okay, so neckline, I hope you will know that is the resistance, like in head and shoulder, inverse head and shoulder, the resistance under which the price is moving for this whole duration, that is the neckline. So when we see the first rejection from the neckline, the price should not drop more than 50%. And how would you check that it has dropped more than 50%? That you will do with the Fibonacci tool. Okay, so this wave should not drop below 50% area. Okay, yeah, it can be like a wick can go up to 60% or even 70%, but the candle closings should be above 50% area. And in many cases, if the trend is very strong, you will see that it has retraced only 38.2% or 40%, but it does not even go below 50% with the wicks. Okay, so we would check here what was our correction. So I'm using a Fibonacci label. I'm taking it to the neckline, right? So let me just use a different way. This is my customized Fibonacci tool. So we will use okay, I'm using the default Fibonacci tool now. So if I take Fibonacci from the very bottom here to the neckline, we can see that price has retraced exactly 50%. This is the 50% level, and here we have perfect retracement to 50%, right? So our Fibonacci level, the Fibonacci rule was actually was as expected, and you can see there's no candle close below 38.2 level. So that is a perfect retracement for cup and handle pattern. Okay, so this was also a good indication that this handle is going to break out soon and it is going to be big. Okay, so you always need to remember that the handle should not exceed more than 40% to 50% in usual cases. Okay, fourth rule is optional. You can even trade with all these three confluences: a consolidation of more than 50 candles, a handle with retracement less than 50%, okay, and with minimum of the candles. So if you have these confluences, you already can trade cup and handle pattern. But if you want to add some extra confirmation, the fourth thing I use, that is the volume. So volume profile is also very important in this pattern if you know how to use it. So the first condition is that in this duration of cup formation, like from this place to this place, the cup formation, in most of the part, the volume should not be very high. It should be very low and it should be constant. So I'm applying volume indicator in it, right? And I'll check now. So from this area, you can see most of the time the volume was almost constant and it was very low. So if the volume was very low during the whole consolidation, that means that the breakout will be bigger. Okay. While formation of cup shape in 70 to 80% area, the volume should be constant. The second part you need to follow is that at the time price reached to neckline and in the formation of handle, the volume should rise. The volume should rise at the time of handle formation, and when price is going to retest the neckline while completing the cup shape. The volume was increasing from this level, right? So the volume was increasing, okay? So that's why this cup and handle pattern was actually a good pattern to trade, and that's why I was very like attracted by this pattern when I see somebody calling LRC, right? So when I checked the chart, I saw this pattern, so I thought to let's to think and take a position in it. However, my bids have not filled yet as I just drew it today, right? But I will wait for my entry. Now, if you understand all four conditions, the cup formation, the handle formation, the handle retracement, and if your volume profile is also in favor of the cup and handle pattern, how to trade, that is also an important part to learn with the pattern. So I have three kinds of entries in a cup and handle formation. The first two I called aggressive entries, and the third one I called a safe entry. So you can pause and read all this. I'll explain in the chart. Okay. So I'm just drawing, I'm removing the volume. I'm just showing the pattern over here. So we have a curve for cup, right? And we have a handle here. So very first entry, that is an aggressive entry, when you see the volume is constant and cup is formed at this point. When you see this chart, what you can do, you can place a limit order, okay? You can use Fibonacci tool from the very bottom to the neckline. And at the 50% area, you can place your entry and you can wait for price to appear here. So if you have just placed your limit order just a little above 50%, it would have got filled. Okay, when you are trading Fibonacci and in the trending market, never place your order at exact 50% level or exact any level. Try to give a gap of 3 to 5 satoshis or 0.5%, so your entries get filled, because sometimes they do not get ordered at exact price and the wick comes but your order do not get filled, your bids do not get filled. So if I have placed it around 355, it would have been filled as it made a low of 354, right? So I could have taken this entry here. And what would be my stop loss? Your stop loss can be, the best stop loss is considered as the bottom of this cup pattern, but that does not make a good risk reward, right? However, if you are sure on your pattern, so you can keep it as low as possible. If you keep it to the very low, okay, that is the best. However, I personally use this at below 80% when I was using Fibonacci, when I placed it from this place to this level. And I know if it is a handle formation, the price should not drop below 50%. A wick can come up to 61% or even 78%. So I usually keep my stop loss below 80%. I will keep my stop loss here. And what will be my target? My first profit target would be at the neckline. Okay, in case because when we trade, we should always know that always pay a trader, right? So we should always book our first profit or at least some position after +1 hour, and your risk reward will always go +1 if you would be taking it at neckline. Okay, and what can be your second target? Your second target you can use from neckline. You can place your Fibonacci from neckline to the low of the handle. Remember, I'm using Fibonacci tool from the neckline to the low of the handle, and 161% of this handle is your first target. Okay, second target would be the 261%, or in between you can also take another level, that is 200%, that would be around 540. That can be your second target. Okay, so if I use the Fibonacci tool, I will have to add it an additional label, that is 200% that we have here, right? So this one, yeah, I was approximate, right? So around 550, that would be your second target. So if I remove the tool and if I use the risk reward tool now, if I book my first profit at 161%, it is 2 hour. It is 2.6 on the second target, and if we go to 261%, it goes to 3.5 risk reward, and that is very good to trade. So that is how you can take your first entry, but this is an aggressive entry because in case the handle is not formed and it is not a cup and handle pattern, the price may directly drop down and you might get your stop loss trigger. So it is an aggressive entry. Their second entry you can place is the market order, or you can place a buy stop at neckline. Okay, you can place the second way of entry because you don't know if the handle is going to form, but if the handle is going to form, it is going to break out. You can place your entry just above the neckline to avoid wicks. Okay, and if your price comes here, you will keep your stop loss below hand here, and you will target, first target would be 161%. But if you are taking it from the neckline, what would be your first target? This time you will use Fibonacci tool from the very top of the cup. This cup formation wave has gone a little higher. That may be due to the volume profile in the coin on Binance exchange. You may not see this wick on other exchange if you are trading, but if you are using Binance and you see a wick above cup, so if you are taking entry above neckline, so you will place your Fibonacci tool from this point, from this point to this point, and then you will target your first and second target areas. So what I will do now, I'm removing the targets from the first entry and I'm going to take targets for the second entry. This time, if we are taking a buy stop entry or a market order, I'll use Fibonacci from this label to the low of handle, where I have my stop loss below the handle, right? And my first target would be 161%. Okay, that comes approximately 716, and that is the best area to book the profit. My second target would be 800, that would be approximately 3.3 R, and the last target would be 261%, that will give 4.75 risk to reward, right? So that would be a good trade if it goes there. However, I usually book on the first target maximum of my profit, and that is 161%, the golden ratio of Fibonacci, and everyone knows that, right? And the same targets we will use for the confirmation entry, that is our safe entry or confirmation entry. In this, what we do, the entry I have shared on my chart, we will use the 161 as first target, second target, and third target. I'm removing the tool from here. In this, what we do, we wait for pattern to form. So as now I can see that the cup has formed, the cup formation is done. Now I know the handle formation is done. Now I know that the price has already broken out the neckline. So what I will do, I will wait for a retest. I will wait for a retest, and on retest, I will take an entry using a limit order, and then I will place my stop loss and I will wait for target. So what I expect price to go to confirm that it's a good breakout, it will go higher. It will come to retest this neckline. It should come actually, and then it should go for our target. So this is what I am expecting. I'll place my limit order there, okay, and where would I place my stop loss? I will place my stop loss below the hand, right, and I will target this level. Okay, so we will check our risk to reward for this target now, and if we are placing our limit order near the neckline, not exactly at the neckline, sometimes it does not test it accurate point to point, and this will be my stop loss, and this is a trade of 2.5 risk to reward. Okay, so this is how you trade cup and handle pattern. Okay, and in future I'll try to make a few more videos on different patterns I trade. However, nowadays I trade patterns less, and I usually trade the market psychology, support, resistance, and I'm loving that. So I'll be start making some videos on that topics as well. But this is the job, this is the pattern I have traded in my beginning days, and I've also traded it with a very good accuracy, but only if I have followed these rules, then they have been very successful. I hope this will be successful for you, and I hope this video can help you. Have a good day and keep trading.